Hi, it's Ken and Britta from Practical Financial Planning. We have some thoughts for you on the election. Britta.
One thing I want to be very clear on is that we are recording this Monday and posting it Thursday. That means we are recording this before we know what's going on with the election. We don't know the outcome of the election. We did this intentionally so that we could say our advice does not change based on whether the winner is Trump or Biden.
We do think the outcome of this election matters. We think that there are going to be differences in policy that will affect our lives, but we think those effects are probably much more predictable than the effect on the stock market. The stock market's inherently unpredictable, and as our experience 4 years ago proved, there's no way to know with any certainty how the stock market's going to respond to a win by either candidate.
Yeah, I remember coming into work the day after 2016 election, and Ken was in Canada that day, and I arrived to work with an email saying, okay, the clients are going to panic as soon as the market opens. It's going to open down. Everyone says it's going to open down. It was down overnight, and here's an email to send to all our clients while they're panicking. And then the market opened.
And the market did what the market wanted to do, which didn't have anything to do with what the people watching it thought it was going to do. It's just the nature of the stock market to be unpredictable and to be volatile. And those are short-term characteristics of the market. It's natural that people would be concerned about how the election results might affect the stock market. But in the long run that matters for the stock market, we're very confident that businesses are going to continue to earn profits. That's what we experience with the stock market. And we will not be changing our long run strategy because the market, in many ways, is going to behave the way it does regardless of who's in office.
Yes, the long term market outcomes, those are the ones that are based on the actual profitability of companies. How well each individual company does will impact the value of its price in the long term. Short-term market performance, that's about news. That's what can change a lot based on what is happening in the United States election, what's happening in Europe, what's happening in Japan. That is what impacts the short term. And while many of these changes will eventually have an impact on long-term investment outcomes, we don't know what those impacts will be. And in the long run, and we are all investing, hopefully, for a long time, the stock outcomes are expected to be positive over the next 30 years, even if they happen to go down in the near future. And we don't know whether they're going to go down in the near future.
In fact, that's nothing new. We never know whether the market's going to drop in the near future, which is why we advise our clients that the money they need for the short term, that should be in things that are much more reliable. And a good example would be an FDIC insured bank account. So you're not likely to see massive changes to our long-term investment strategy based on whatever news you might know on Thursday that we don't know today on Monday as we're recording this.
Yeah, asset allocation is based on your life, the risks you need to take in the market, the risks you can take in the market. What are your goals? What is your life like now? What do you expect it to be in the future? That is what you base your asset allocation on. You don't base it on the outcome of an election.
So if you have concerns about this, please feel free to reach out to us. Take a look at the links in the comments below this video. You can find a link to our article from Tuesday if you haven't had a chance to see that yet. And please remember to like us on Facebook and LinkedIn. We'll see you again with a new video shortly.